Thank you. Good morning, students. Today being a very early morning Sunday class, request you to please send it on the question panel whether you're available or no, so that I am aware that yes, how many students are there. Please text on the question things saying good morning so that I know how many students are there. Quite many students. Nice. Good morning, Subhobal. Good morning, Pooja Gajjar. Good morning, Hariharan, Sandeep Sandhu, Priya Bhatia. Good to see you on this Sunday morning. So if you have got up early and come, means you have lot of dedication and you have lot of, that is what is more required. Whether we will, whether the subject is dry or will it be very theoretical or no, but still you're attentive and you're coming to the class on time. That's a great thing. Really appreciate students for getting up early and coming here. Trust me, you have done the best thing of getting up early and reading it, so that if you continue with this reading, you can explore anything. There's no limitation for anything. If you have that dedication, if you have that fire in you, can really do it. Yes, great. So many people coming in. Menan, Afik Bhai, Rekha Kumari, Rajeshwari, Ankit Verma, Mrs. Charu, Miss Akanksha Pandey, Vivek Sheponde, Kalaivani, Kalaivanan, Shivangini Singh, Dorji Funso, Elemma, Rekha Kumari, Rohini, Neeraj Pawar. Excellent. So many people coming up. Yes, the notes have not been uploaded because I want to discuss the notes today, and I want you to just understand the topic, and then I will upload, because we have 3 sessions for this input tax credit. So we will go through the sessions and then I will upload, because if there is anything which you want in terms of this addition or some slides to be added, then I will add that and then upload it. That's the reason the slides have not been uploaded. The slides are ready with me, but I have not uploaded them yet. Good morning, Tannu. Good morning, Miss Tannu, Gaddi Madhava Reddy, Shrishti Katuria, Pandava Gayatri, Miss Vandana. I know there are more people than this who have come in. We're seeing good number of strength today. So today we'll discussing on input tax credit. Okay, so we know everywhere in all the topics, any topics we have discussed, this input tax credit has been coming up, saying that GST, under GST you'll get the input tax credit, you'll get the input tax credit. What is input tax credit was a lot of query raised by a lot of students saying what is input tax credit, how to claim the credit, and things like that. That is the main topic under GST, which is practically also very important, and in your academically also it is very important, because if the input tax credit is claimed, okay, that is a benefit to you, because that benefit will not come to you automatically. It will come to you once you claim it. So how do I claim it is what we will discuss here, and what you can claim, what you cannot claim, everything will be discussed. So in the previous topics, we understood that GST is applicable on supply. So when I supply any goods, GST will be levied. Similarly, when somebody supplies goods to me, they will levy GST. Now, when they have levied GST, okay, they have levied some GST. That's a credit which I can take. So the credit mechanism works. Then when I sell something, I charge GST. Similarly, when somebody sells something to me and I purchase it, on the purchase, whatever is the tax, that is a credit which is available to me. So when that credit is available to me, which means that on the same product, multiple people are charging GST. We started with manufacturer. We had that example of Excel sheet wherein we showed you how the GST credit flows in, right? A manufacturer, when he manufactures, he will charge GST. Once he charges GST, right, I will buy it. I'm the wholesaler. On the same product, I'm selling it. So I will also charge GST. So how many people can charge GST on this transaction? Any number of people. There is no limitation of business chain. Anybody can charge the GST. Now, if I am charging GST and I'm buying the same product and selling it, then government is saying, okay, you claim the credit on this. That claiming of credit is called as input tax credit, or in the nominal terms, it's called as ITC, input tax credit. So ITC means the tax credit which I have when I purchase from my vendors. Okay, under GST, we can claim credits of only goods, or we can claim credit of services also, because in GST, it is a goods and services tax. We have understood from way, length, and breadth saying that it is a seamless flow of credit. It wants to take out the hindrances what were there under earlier law. Earlier law on service tax, when I used to pay, I used to claim credit of only service inputs. But under GST, if I'm selling a good and I can, if I bought something and on which I've incurred some service charges, that also I can claim. So under GST, there's no restriction that if I sell goods, I should claim credit only of goods. That is not the restriction. There's no restriction. So you can sell a good, you can claim credit of goods as well as services. Okay. So be careful. You have to understand the importance of GST input credit. Input credit is not a restriction or something. It is a benefit. So any purchases I make and any services I avail, both of this credit can be used for sale of goods. So credit is available on goods as well as services. Okay. Basically, before getting into chapter, I'll just show you a chart so that at least you'll understand that how the credit works and how it should work. What is ITC? What is input tax credit? We know on tax, on sales, there is tax. This tax is called as output tax. On my sale, what tax I pay? That is called output tax. On purchases, so this is my output tax. I have to pay this to the government. This, should I pay from my pocket? No. When I sell something, I will collect it in my invoice. In my invoice, what I collect, that tax is called as output GST tax. Then what I have to reduce, when I've collected this from the customer, should I pay this wholly amount to the government? No. From this, I have to reduce whatever is the tax on my purchases, tax on my expenses, and tax. This is the GST payable. Or if it is negative, wherein on my sales, I have to pay less tax, and on my purchases, expense, and machinery, there is more tax, then it becomes a GST credit. Okay, this is a GST payable or GST credit. The balance, what is lying, is called as balance ITC. So output minus input is what I get as GST, either payable or GST credit. So if it is excess, it will be GST credit. Now let's understand that with the help of some numbers also. The same concept I'm making you understand in terms of numbers. So I have purchased 3 products, X, Y, and Z. It could be X is a product, Y is a service, and Z is a capital goods. Okay. I have purchased these 3 and used for my output services. The tax paid on purchase of X, the tax paid, not the value. Whatever is the value, that's the value. But I'm considering only the taxes. The tax paid on purchase of X is 100. The tax paid on purchase of Y is 120. And tax paid on purchase of Z is 80. So X, Y, Z is what? This is the inputs for me. The total in taxes which I've paid on X, Y, Z is called as input credit or ITC. So 100 plus 120 makes it 220, 220 plus 80 is 300. So 300 is my input credit. Okay. The sum total of X, Y, Z is my input tax credit. Now I have made a sale. The tax on my output is 450 rupees. The tax on output is 450 rupees. Tax to be paid by the manufacturer is, so 450 is the output, less tax paid on inputs, which is 300. So 450 minus 300, when I claim the credit, input tax credit I have 300, output tax I have to pay is 450. So 450 minus 300 makes it 150. 150 is what I have to pay to the government. So I have to pay 150 rupees to the government. Okay, so output minus input is the net liability which I have to pay. So input is the total of this input tax credit. Fine. What is output GST, input GST? This is what is output GST. This is what is input GST. Output GST is tax on my sales. because I'm selling something. There is an outward supply. The tax what I pay on that is output GST. Input GST is when I purchase something, I pay taxes because I am inputting. I'm purchasing something that somewhere some goods are coming inwards. So that is input GST. Okay, output GST, input GST. Clear? Now we'll get into the actual topic. Now what used to happen under pre-GST? We've known that under central excise, the input tax credit was given through a mechanism called CENVAT scheme, Central Value Added Scheme, wherein you used to get the credit of central excise duty paid by the manufacturer. But who used to get that credit? Only if another person is also registered under CENVAT. Okay, if one person is registered under excise duty and another person is not registered under excise duty, he never used to get the credit. Only a person who is registered under central excise duty and the other person who's buying is also registered under central excise duty, then he could get the credit. Okay, so CENVAT, there was a limitation that it used to flow from only one person who's registered under CENVAT under central excise to another person who's also registered under central excise. Fine. So what happens? The credit under CENVAT became a cost to a lot of people who were registered under VAT only. They were not registered under central excise, because who will register under central excise? Only a manufacturer. So if I'm not a manufacturer and if I'm buying something from a person who's manufacturing goods, that used to become my cost. Okay, so I was always burdened with tax on tax. That is what was cascading effect. Okay, and similarly, a person who was registered under value added tax, under state taxes, who was registered, he was charging VAT. He was charging, say, a VAT. Okay, under state VAT, it was called as Karnataka VAT. Under Maharashtra VAT, it was called as Maharashtra VAT. Each state has its own VAT levy. So when VAT used to be charged from one person to another person, that person used to claim the credit of only purchases which he used to make of goods, because VAT was applicable only on goods. So if I'm selling some goods, I used to charge VAT. The other person, he's buying this goods and selling it again, he used to claim the credit. Similarly to GST, what we are discussing, that credit is available. That was available in VAT also, but it was restricted to purchase and sale of goods. Now, if this VAT dealer who's selling these goods avails the services of any of, say, testing services or services of specialized agency or any rental he used to pay, because he used to operate from a premises. So on rent also the service tax was applicable. So if the landlord used to charge him service tax on the rent component, that credit he could not take, because that was a central levy and that was not fungible. The credit of service tax was also part of CENVAT. That service tax credit and VAT never used to get exchanged and never used to get mingled up. So the services, whatever was the services on that taxes, what was paid was becoming a cost to him. Okay. So that was not applicable. So that was what this was biggest hindrance under the earlier law, that the credits were not available of CENVAT against VAT. Or a VAT purchases what I used to make, I cannot claim it against my CENVAT output taxes. So that was the biggest lacuna. That's why GST had come in. There was no fungibility between CENVAT and VAT. Also, there was one more tax called as central sales tax. CST was central sales tax, which was levied on interstate transaction without any credit. The CST rate was as low as 2%, but still, that was an extra cost. When I used to make any interstate purchases, now I have to pay IGST. I know that, and IGST is a credit which is available. Earlier, that it was called as, what was charged was central sales tax. Okay, so central sales tax was levied on any interstate transactions, but even though if I am a VAT dealer, I never used to get the credit of that. CST was also not available. CST was always a cost. If I purchase something from another state, I will the seller will charge me CST, and I will not get the credit of that. That became my cost. Under GST, we have seamless credit on goods and services. So even if I make purchase of goods, if I make purchase of services, if I do interstate purchases, everything, I will get the credit. So I will get seamless credit on goods and services. Exception is supplies charged to tax under composition scheme. So we know under composition scheme is a special scheme. So there the chain stops. Okay, so if a composition dealer is in the chain, if he buys something, he will not get the credit of this. And when he sells also, he cannot collect the CST, he cannot collect the GST. So if I'm purchased from a composition dealer also, I cannot claim the credit. Okay, so exception is supplies charged to tax under composition scheme and supply of exempted goods or services. So on sale of exempted goods or services also, the credit gets blocked. Why? The thing is very simple. The government wants the tax to flow in. Okay, if the tax is stopped, that's when the credit gets blocked. So if A is selling to B and B is selling to C, A is charging something to B, B is taking the credit and charging it to C, C is taking the credit. But see, in this chain, if ABC is there and B doesn't charge, if A is charging something and B says my goods are exempted, okay, if his goods are exempted, then his input tax credit should also not be available. Why? Because the credit flow says that input tax credit will be available to everybody who is claiming the credit and paying something to the government. If they don't pay anything to the government for any reason, for a reason of, say, it is a composition supplier, or say for a reason that there's an exempt supply. Okay, we know what is exempt services, right? So let's take an example that a charitable organization is receiving something. We know that services provided to a charitable organization is not exempted. So A is a non-charitable organization. He's providing some services to B. Now B, when he gets the services, he will take the service, right? On this, GST is being paid by A. Now B is a charitable organization. He's providing services which is exempt. He will not charge GST. So government is saying, since you're providing exempt services to C, he is providing exempt services to C, don't charge GST. C will not get the credit, no problem. But B, you will also not get the credit because your output is exempted. Since your output is exempted, input also you will not get. So ITC, one of the biggest thing to note is, if the seller is making any outward supply on which tax is payable, then he will get the credit. If he's making any outward supply on which tax is not payable, then he does not get the credit. Okay. That's how the GST credit flows in. What do you mean by fungibility? Fungibility means credit of anything which is purchased is available. Goods purchased, service purchased, I can claim it and offset it with my output is a fungibility. But when I say that under SENVAT and VAT there was no fungibility, it means SENVAT purchases what I used to make was not fungible, was not creditable with my VAT sales. It was not interacting, or it was not getting doing a handshake with VAT purchase or VAT sales is the meaning of fungibility. Capital assets used in business and not sold, then also you can claim ATC. Yes, capital goods I am purchasing not with the intention of sale, I am purchasing with the intention of using it for the business. So if I use it for making any taxable outward supply, that is also permitted. So capital goods, very good question. So you said it should be sold, but capital goods you're not selling. Correct, capital goods I'm not selling, but capital goods, why am I using? Am I using it for making any kind of non-business use? No, I'm using it for a business use. So capital goods, even though if I'm not selling it, I'm making use of it in the business. So I can claim the credit on capital goods also. Because they know that not in 1 year, it will be used over a period of 5 years, 4 years, 5 years, whatever, more number of years than more than 1 year. So capital goods also you can claim the credit. As we know, the government is planning to levy tax on crypto transaction. Will ITC be available on these? If it is taxed, then it will be available. So there is, as of now, on cryptocurrencies, there is nothing which is said. So when the GST, the tax on cryptocurrency comes, then there'll be some restrictions which we'll have to go through. But as of now, I feel that yes, output, if it is taxable, input tax also will be available as credit. Sir, if I supply to NGO, which is exempt, don't get ITC, yes, on these supplies. So would it not lead to double taxation and once paid for purchase, and since ITC not available, pay fully tax collected from NGO? No, it will not imply that it's a double tax. It means the chain is broken. So I am charging once to a charitable organization and they are not charging anything. So where is the double taxation? There is no double taxation in the case of NGO. Your specific question is, Exemption, don't get ITC on those supplies. Yes. So would it not lead to double taxation as once paid for purchases and since ITC not available, pay full tax collected? No. So they will not pay charges again. They will not pay GST. No. So on whatever services they supply, they don't pay GST. So there is no double taxation there. Okay. Now we'll understand the basic important features of ITC. Okay. It avoids, like, what are the features of ITC if they say, then you should understand this, and also you should be able to write in your own mind by mentioning the main points. First is ITC avoids cascading effect, which means there's no tax on tax, like how we had seen under excise, VAT and things like that. There was a possibility of cascading effect. Here, the avoid cascading effect, most of the things are there. Okay, so CGST, SGST is a credit available against my output. IGST also. CGST can be claimed against CGST, SGST can be claimed against SGST. Just one thing is CGST key, input credit of CGST cannot be claimed with output tax of SGST. Okay, and input tax of SGST cannot be claimed with output tax of CGST. So CGST and SGST is not fungible, but all other taxes are fungible. IGST I can claim for paying CGST and SGST. Okay, CGST I can pay for claiming CGST, SGST I can pay for claiming SGST, but CGST and SGST doesn't do a handshake. Okay, to that extent there is cascading, but other than that there is no cascading effect. GST will become a destination based tax. The ITC moves to the state, like how we had seen the example on the other day of Rahul Dravid selling goods to Anil Kumble and Anil Kumble selling it to another Virag Sehwag. So we know that as and when the taxes move, as and when the goods move, the taxes also move along with it. So it moves from one state to another state, right? So when I sell something to another person, the other person gets the credit, and the state which got the credit initially, thinking that it is its tax, it will not become its tax. It will move to the state where the taxes are moved. Okay. ITC is available on input services and CG. CG means capital goods. So input is available on all the three. Input ITC is available on inputs. Inputs means goods which I purchase, goods which I use it. Okay. Services means, input services means all services which I claim. Okay. All kinds of services and capital goods. So ITC is available on inputs, services and capital goods. Less, so all this input I will get. Then what is reduced is block credits, even if it is used for business. So government has said that I will give you a certain list, which is called as block list. Okay, this is called as block credit. This block credit, I will not give you credit even if you use it for your business. Okay, why? Because government says that these are restricted credit, which I will not give you. So biggest hindrance under GST is this block credit. So there are certain lists, around 13 items are there, 12 to 13 items are there, which are there under block credit, for which you will not get the credit even if you use it for your business. Could be the example? Example is purchase of car. A car has been purchased for transporting employees from workplace to office, or for transporting directors, or any cab services is used. These are all used for the business, right? But still it is there under block credit list. So credit on that is not available. Fine. Then ITC is used for payment of tax. Why is ITC used? ITC is used for payment of tax. Okay. Whereas ITC cannot be used saying that, okay, it's in my kitty, so I can use it for paying interest. No, ITC cannot be used for making payment of interest. It cannot be used for making payment of penalty. So ITC can be used only for payment of your output tax. Input tax credit can be used only for payment of tax and for nothing else. What is the corollary of this? What is the flip side of this? Means ITC is not available when tax is not payable. So if my output is exempted, it is not payable. But one exception is if it's a zero rated supply, then credit will be available. Means what? If my output tax is a exempted supply, then I don't get the credit. But if my output tax is a zero rated supply, that's the reason they have made a distinction between exempt supply and zero rated supply. Exempted supply, the input tax credit is not available. But if it's a zero rated supply, the input tax credit is available. Why? Because it's a special category of supply. What are these zero rated supply? Zero rated supply means supply made to a SEZ zone or a SEZ developer, or export supplies made on export, or supplies made export services. So export of goods and export of services and supply to SEZ or zero rated supply. So here in zero rated supply, even though output tax is nil, it is not equivalent to an exempt supply. These are special category of supply where if I make an outward supply, input tax credit is available to me. Okay, we'll run through the definition of ITC. That time we'll understand that what is a zero rated supply with the definition. Okay, one-to-one correlation not required under GST, under ITC. So if I have sold this remote control, all the parts used in it, credit will be available. But when I make outward supply, there is no correlation that I should have saying that what are all the inputs which is used, what are all the service which is going into it. No, one-to-one correlation is not required. I don't have to do the costing sheet for this to claim the input tax credit. So whatever business I do, output tax when I pay, input tax is available. It does not need that one-to-one correlation I have to do. Not required. One-to-one correlation is not required. So any kinds of inputs I do for the purpose of business will all get dumped together in one ITC ledger. I don't have to prove that this ITC I will get because I've used it for selling something. Not required. If I use it for business, that should be sufficient. Just use it for business is sufficient. IGST is core for interstate. So IGST is a core thing. It is the backbone of GST because it has to move from one state to another state. So movement from one state to another state happens through this IGST. If IGST was not there, then all states wouldn't have had the same rate of tax. They will tell, okay, I will not get the credit for whatever purchase is being paid from another state. So why should I follow what is being paid, being framed by the central government? I'll have my own rate. They would have argued that way. But since IGST is saying there, so all the states are assured that if my dealers purchase from other state also, still they will get the credit. Okay. Both taxable and exempt supply. So I told you that if I have any exempt supply, then input tax credit will not be there. But see a case where I'm making a taxable supply and exempt supply. Then I will get credit of only those goods which is being used for my taxable supply. So if I'm using anything which is there, which is being purchased and used for exempt supply, then on that I will not get the credit. So one thing, if I'm making exempt supply, no input tax credit. And if I'm making taxable and exempt supply, so I'll get credit only for those goods which is being used for my taxable supply. Goods which have been used for my exempt supply, I will not get. So then what happens to common input tax credit? So there could be some inputs which is common for which I am using both for exempt and taxable supply. What happens to that? Common inputs, proportionate input tax credit attributable to taxable supply is available. So if there are any common inputs which I'm using both for supply of taxable goods and supply of exempted goods, then I will get only proportionate credit to the extent of proportionate usage to the extent of turnover. So turnover will be my basis, not on the basis of number of units. So whatever turnover I do, say 100 is my turnover of taxable goods and 200 is my turnover of exempted goods. So 100 is sale of taxable goods, 200 is exempt goods. So how much is the proportionate of taxable goods? 100 divided by 300. 300 is 100 plus 200. So one third of my input I will get as a credit for availing this, for common credit. If it is a specifically used product, so if I am selling, say, this remote control and battery is being purchased. Now battery is specifically used for this. So I will get full credit of this battery because this is a taxable supply. Now I am also selling a calculator. Calculator is exempt supply. On this exempt supply, I have again bought a battery. Now on this battery, say this is not exempt, but just for example, on the calculator, if it is an exempt supply, then the battery bought on this is say for 50 rupees. that 50 rupees I cannot claim the credit, it becomes part of my cost. Okay, so this is taxable supply sold, so input tax credit is available. This is exempt supply. On this, whatever taxes I paid on purchases of the same product, credit is not available. Fine. Then what happens to common credit? To buy these two products, I've used the service of a transporter. Now, transporter, I have to pay GST under RCM, right? Under RCM also, what I pay, that also credit I'll get. Yes, that also I'll get the credit. So any purchases I make, whether the supplier pays the tax or the receiver pays the tax, credit is available. Now, to get this goods in my location, I've used the transport of a GTA, or both have come in one bundle itself. Now, I cannot bifurcate each product wise and things like that. If I can do it, good. Otherwise, there are common credits. So the common credits, when I claim it, how much credit I can claim? I can claim the credit of this common input to the extent of turnover for sale of the remote controls during the month. So this turnover, this turnover I'll take. If the turnover of this is 500 and the turnover of calculators is 1000, so 1/3 only input credit I'll get on the GTA services. Okay, so wherever there is common services like this which have been used for sale, used for selling of both taxable and exempt goods, proportionate credit only will be available. Okay, let's see this with a chart. Inputs and input services. If it is used for business purposes, whether my inputs and input services are used for business purposes, yes, I've used for input purposes, ITC is available. But if I've used input and input services for not for business purpose, if I'm used this not for business purposes, then ITC is not available. Another last scenario will be where it is commonly used for business and non-business, then credit is available on the basis of turnover attributable to common credit. So this is when it is used for business purposes. Input and input services, which is used for taxable supplies. Is my input and input services used for taxable supplies? Yes, ITC is available. It is used for non-taxable supplies. What is the exception here? Exception is zero rated supply. So zero rated supply also, you will put it in the category of used for taxable supplies because it says that credit is available. Okay, so if it is used for taxable supplies, credit is available. If it is not used for taxable supplies, credit is not available. Then we have a scenario of commonly used for taxable and exempt supply. When I'm using the input and input services for taxable as well as exempt supply, then in both these cases where the common input tax credit is there, then the credit is available on the basis of ratio of turnover established to common credit. Clear till now? Lot of questions. Why the government has blocked some items where ITC can't be claimed? Because there is a restriction, there is huge amount of credit and it is prone to being used for personal use also. Like car, government cannot keep a control whether the car is being purchased and used for personal use. Everybody will tell it is used for business use. And they just want to block the credit saying that these are credits which I cannot give you. If I give the credit on this, then it becomes a very costly affair for me. So credit on these items are not available. ITC will not be available if output tax is exempt. Yes, as per section 2 subsection 47 doesn't include if exemption in tax is provided by way of certain subsidies. So it means ITC can be available by to registered person. Exemption of tax is provided by way of central government subsidies. Yeah, if central government subsidies is there, then it is not a exemption. No, 2 subsection 47 is the definition of input thing. Let me just run through 2 subsection 47. Exempt supply. What does 2 subsection 47 say? Exempt supply means that both the services are both tax or which may be only exempt from tax under section 7 or under section. So exempt supply means all those supplies. So whenever I get subsidies also, it is not an exempt supply as such. Yeah, so when we saw value of supply, that time central subsidies is whatever is received has to be excluded. That's a different thing. But here, central subsidies, if you receive, okay, it is not a exempt supply. Clear? That is fine. So what are you asking? It means that ITC will be available to registered person It's a ITC will still be available, yes, because it's not an exempt supply. Because subsidies, what is received is not in the nature of supply. Yes, you're correct. So ITC will be available in that case also. If a person is carrying more than 13 people, then can we get input tax credit if bus is used for employees? Yes, if bus is used for employees, we can get the credit because the restriction is up to 13%. So a bus will have more than 13%. When we discuss ITC, you will get to understand this. It means zero rated supplier can claim the ITC. Yes, they can claim the ITC. Can ITC be used for paying GST late fees? No. ITC cannot be used for paying GST late fees. It cannot be used for making payment of interest. It cannot be used for making payment of any penalty. Neither it can be used for making payment of any late fees. Can a non-registered person claim ITC? No. Only a registered person can claim ITC. The biggest advantage for a registered person is he is the person who can claim the ITC. Now, we know that there are two definitions. One is taxable supply, okay, and one is a registered person and taxable person. Most of the GST levy is levied on a taxable person, which means even if he's not registered, he's liable to pay GST, correct? Because if he's crossed the turnover, he's liable to pay the GST. Can pay it now, take the registration, pay it now, or later on he has to pay. But a registered person will be registered and he'll pay it, fine. The advantage to a registered person versus a taxable person is a registered person only can claim the credit, but a taxable person cannot claim the credit. So if you've missed out taking the credit, you're thinking that, okay, I will not take the credit, I'll just escape it, not possible. You will end up paying the taxes, and that time credit also will not be available to you because GST credit is available only to a registered person. So if you're registered, only then you can claim the credit. So in case of use of input and services for business and non-business purposes, ITC is based on turnover. What will be the turnover in case of non-business use? So for non-business use, they have said that there is a limit of 5%. Because non-business use, you cannot, if you can determine, then fine. If not, then 5% of your turnover will be treated as the turnover of our non-business use. So that's the ratio which has been fixed by the government. If you can still identify saying that, okay, this is my business turnover, non-business turnover, good. If not, then 5% of your ITC, 5% of your ITC, you have to write it off as non-business use. So even if small portion you use as for non-business use, then 5% of the input tax credit has to be reversed. For common credit, example is fees on chartered accountant. Yes, for filing GST return credit may be used only the proportion of taxable supply and exempt supply. Yes, the services of a chartered account for filing returns is an example of common credit. What is common credit? Credit which is not used for taxable, neither it is used for exempt. It is used for both taxable and exempt is an example of common credit. ITC can be claimed on lunch provided to employees. No, it cannot be claimed because food expenses credit is not available. Please explain how OTC will be distributed on the basis of the turnover. We'll take an example and we'll understand this. Can we avail ITC on negative supplies? So there is no question of negative supplies under GST. Under GST, we have only block credit. Negative supplies was there under service tax. Does registered person include casual taxable person or non-resident person? Yes, registered person includes a casual taxable person and a non-resident person also. But credit for them is only restricted. A CTA casual taxable person can claim all the credit, but non-resident person can claim only limited credit of what he's bought from outside India. How a zero rate supply will get the credit? Not in cash, he will get the credit in his input tax credit ledger. So a zero rated supplier who's making supply, he will not charge GST, but whatever purchases or input per expenses he incur, on that he can claim the credit in his electronic credit ledger. So whatever credit I claim, where does it go and how does it get claimed? So I've made purchases. Now there are some conditions to be satisfied to claim the credit. I've satisfied those conditions that we will just read now in some 10-15 minutes time, saying that what are all the conditions to claim the credit, because credit is being given to you. Now this credit, what has been given to you, has to be availed carefully. So this credit, what has been availed, I'm satisfying all the conditions. Then what will I do? I will take the total credit, like how I pay total taxes on my output supplies for the period. So when we said the time of supply is there and tax is different. So all my sales for the month I accumulate and file my returns. Fine. When I file my return, the credit output tax is payable. Similarly, whatever purchases I make for the month, expenses I incur for the month, capital goods I purchase for the month, I will accumulate all of those things and claim that credit in my GST return. So output minus input will be my GST payable. So how much of ITC I can claim? Whatever purchases I make for the month, and if I'm satisfying all the conditions, I will get the credit on that. Fine. So once I claim the credit, output minus input. Now input, whatever I do, I will mention it in my GST returns. Once I mention it, it will come and get accumulated in my electronic credit ledger. The total of your inputs, input services and capital goods will get accumulated and get clubbed in one ledger called as electronic credit ledger. Okay, this electronic credit ledger will be there. I will then claim the credit for paying my output taxes. Okay, so in case of a zero rated supply, what happens is output tax is not there, but he will mention all of this credit in his electronic credit ledger and claim that credit. Okay, example of blocked ITC examples of food expenses, car, then any services in relation to personal services are all April and credit not to September also. So if I file due date, there is a link of the annual return or filing of the September return, then my due date and my claiming period will be end on September. So before September, I should claim it. Or if my annual return is filed in July, by the month of July only, I should claim it off. Okay, so that's when the time limit is applicable for claiming credit. If there is there any threshold limit to claim ITC, or is it levied irrespective of any amount of supply of goods? Is there that maximum I can claim only 50% of my output sales? I can claim only 90% of my input tax credit as output sales? No, I can claim total credit, and there is no time. Once I claim it in my books, once for any output. Okay. एक मिनट चेंज करता हूँ. On the time limit when you can claim the credit. So the question asked was, is there any limit to claim ITC? Saying how much credit, how much amount of ITC I can claim? Any amount of ITC you can claim if it is used for the business. Cannot be that take a lot of, generally it will not be possible, but if you are actually in the, is it clear now? Is my voice clear now? Okay. मैं लॉग आउट करके लॉग इन करता हूँ, क्योंकि यहाँ पे अभी तो लैंड पे चल रहा है. ओके. 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 Okay, thank you. So we were discussing on the point of what time till what time is the credit available. So credit is available to you once you claim it within a time. Once you claim it within September of the next year, then that will be sitting in your electronic credit ledger, and there's no threshold limit saying I can claim only 8%, 5%, 50%, or any percent. No, you can claim full credit. You will see one provision wherein for special people, okay, wherein there is suspicious for something, there only 99% credit will be available. 1% credit cannot be claimed. Okay, actually 100% credit can be claimed, but 99% of the credit can be used for payment of tax. Okay, that will come separately, but generally you need to understand that credit, there is no threshold limit to claim ITC. If there is a threshold limit for registration, once you're registered, you can claim the credit. If a person registers first time, then any ITC is available in credit ledger. If he's registered, then whatever purchases he make, he will get the credit. It's not like once he's registered, opening bonus will be given. Or when you log in to use a credit card, they'll give you some cash back, right? Like that benefit government will not give you. So no such benefit is available to you once you register freshly. So once you register, then whatever purchases you're making, on that you will get the credit. Any amendments in ITC chapter? Yes, there is some amendments in terms of percentage, but when we're discussing itself, you'll get to know that what is the percentage of the credit you can claim, which is not there in GST 2 and things like that. Apart from that, there is a reduction in chapters. There is something called as Rule 42 and 43. So that rule calculation is not available for you now. So you don't have to do that calculation of Rule 42 and 43. Okay, the due date of claiming ITC, what I was saying is that the credit can be claimed up till September of the subsequent month. Okay, you can either claim it in the month, this month itself, or later month itself, saying that okay, even if you're missed out, we cannot tell you that no, you've made a mistake, so I'll not give you the credit. You can claim the credit up till September of the subsequent month. Okay, it will be claimed up till the September of the subsequent month, or it can be claimed before either subsequent September of the subsequent month or filing of the annual return, whichever is earlier. How can a zero rated supplier take ITC? Similar to a normal purchaser, he can take ITC. So ITC is on a self-assessment mode, saying that you will mention the input tax credit, what you have purchases, whatever purchase you have done, and you'll mention it. So a zero rated supplier also can mention that credit in his electronic credit ledger and claim the credit. Okay, so we understood common credit and how this apportionment will happen. Now we'll get into the important definitions, what is there under GST. One is capital goods. Capital goods means the goods, the value of which is capitalized in the books of accounts and used or intended to be used in the course or furtherance of business. So what's the capital goods? Capital goods are those goods, the value of which is capitalized in the books of accounts and which is used or intended to be used in the course or furtherance of business. So first two conditions to claim for claiming credit on capital goods. Those goods, the value of which is capitalized. So if I purchased any furniture and I've capitalized, that is a capital goods. Now that furniture should not be with the intention to sell. So if it is with an intention to sell, I will definitely not capitalize, right? My accounting standard, my accounting policy will not let me to capitalize any goods which I'm selling, right? If I'm capitalizing it means I am using it for a long-term purpose. So if I'm using it for a long-term purpose, that's why I'm capitalizing it. If I've capitalized a furniture, then it's a capitalized goods. It is a capital goods, and the intention is to use for a long-term purpose, so it's a capital goods. So for the person who's opting for composition scheme to regular scheme, any ITC available? Yes. So when you move from composition scheme to ITC scheme, it means the credit will be available when you're coming to regular scheme. So whatever stock is lying with you as on the date when you're moving from composition scheme to regular scheme, you have to give a statement on that credit will be available. Can we claim the ITC if ITC is available on GST portal but not got the invoice from the vendor? No. If you have not got the invoice from the vendor, you cannot claim the credit. There are 4 conditions to claiming the input tax credit, which we'll read when we discuss section 16.2. Those conditions has to be satisfied. One of those conditions is you have to actually receive the invoice. You should actually receive the goods and services. So only if these conditions are satisfied, you can claim the credit. So after capital goods are there, once you capitalize and you using it for the furtherance of business, credit is available on capital goods also. Why there is a distinction between capital goods? Because capital, generally inputs are written off in expenses. In your profit and loss account, all your purchases will come, right? Not in your balance sheet. But capital goods goes and sits in your balance sheet. That's the reason it has to be accessible as a credit. That's why they've said that capital goods are special category goods wherein the value is capitalized. Now on that also credit will be available. Okay, generally inputs means all goods which are purchased, and capital goods also are goods only, but they're not forming part of your profit and loss account. They're all forming part of your balance sheet item. That's the reason they said that on capital goods, even though you don't purchase and sell it, you are using it for the purpose of business. So credit on capital goods also I will give you. Exempt supply, 2 subsection 47. Exempt supply means supply of any goods or services or both which attracts nil rate of tax or which may be wholly exempt from tax under section 7, 11 or subsection 6. Section 11 or section 6. Supply of any goods or services which attracts nil rate of tax, wherein the output tax is nil, or which is exempted through an exemption notification. All of that supplies are exempt supplies, and it also includes non-taxable supplies, which means petroleum, alcoholic liquor for human consumption, and those 5 petroleum products also when I supply, they are also treated as exempt supply. So exempt supply includes non-taxable supply. Non-taxable supply are those supplies which does not attract GST. If non-taxable supply are those products which does not attract any tax under GST, then those non-taxable supplies are also included as a part of the exempt supply itself. Input. When I say input means any goods other than capital goods which are used or intended to be used by a supplier in the course of furtherance of business, which means any goods which I purchase, which I'm intending it to use for the course or furtherance of business, in the business or in the course or furtherance of business, which means before running the business itself, before starting my operations, I have to incur some expenses. So say I've set up a factory. Does it mean that my business is started? No, it is in the course or furtherance of business. So any of those expenses which I incur before starting my business is also allowed, because the word used by the supplier in the course or furtherance of business. Okay, so directly used or indirectly used is also available. Input services means any services used or intended to be used by a supplier in the course or furtherance of business. So inputs and input services both have been defined. Inputs means goods. Inputs means any goods. Input services means any services used or intended to be used by a supplier in the course or furtherance of business. Then input tax. Input tax in relation to a registered person means the central tax, state tax, integrated tax, or union territory tax. So all the taxes credit is available. CT, ST, IT, or UT, all of these taxes which is charged on any supply of goods or services are both made to him. Okay, so any supply of goods or services which is made to me is available. So input tax in relation to a registered person means the central tax, state tax, integrated tax, or union territory tax which is charged on any supply of goods or services are both made to him, and includes. And what else does it include? IGST charged on import of goods. Okay, understand this carefully, then I'll take up your questions. So input tax means any central tax, state tax, integrated tax, or union territory tax. Even though I make a local supply, but if I have got any interstate purchases, that interstate purchases, the IGST on that is a credit which is available to me. So that credit is available to me. Okay, it includes IGST charged on import of goods. Okay, normal IGST also I will get, normal CGST also I will get, normal SGST also I will get. Okay, Will I get UT GST? No, because UT GST, he will not charge me. When will I get a UT GST? If I am also in a union territory and somebody else is charging me union territory tax. But if I'm buying something from a person who is registered under a union territory, then he will charge me IGST if I am located in a state. So from UT to any state, he will charge me IGST. Fine. So once I get the IGST, that is a credit which is available. So all of these taxes are available to me. Then the IGST when I import goods. So we know that when I import goods, customs duty is charged plus IGST is charged. On import transaction, it is always treated as an interstate supply. So he will always charge me IGST, right? So IGST charge on import of goods. The tax payable under provisions of 3 and 4 of section 9. So we have read this reverse charge, right? When we did this discussion on charge provisions, we know that what is 9.3 and what is 9.4. So any tax payable under provisions of 9.3 and 9.4, that is reverse charge mechanism, whatever taxes I pay, that is also a credit which is available. The tax payable under 5.3 and 5.4. Similarly, under IGST, same like 9.3 and 9.4, we have 5.3 and 5.4. Subsection 5, section 5, subsection 3 is called as 5.3. So 5.3 and 5.4 also, whatever credit I have to get on interstate purchases, that is also available as a ITC. Okay, so any reverse charge when I will pay and import interstate purchases when I do, or on import of services, like on import of goods, customs duty will be charged by the customs officer and he will also charge IGST. But on import of services, there is no custom officer who is setting in, right? I will have to pay. So I will pay reverse charge when I make any import of services. So when I have any import of services, then the tax is payable. This tax is called as input tax. Okay, so the tax payable under 5.3 and 5.4 on my import of services, whatever GST under RCM I have to pay on my import of services, that is there under 5.3 and 5.4. The tax payable under provisions of 9.3 and 9.4 of the respective state tax. So 9.3 and 9.4 CGST what I pay, that is also available. 9.3 and 9.4 reverse charge what I pay under SGST of my state, that is also available. The tax payable under 7.3 and 7.4 of the UTGST. A person who is registered under UTGST, he will pay RCM under 7.3 and 7.4 of the UTGST, that is also available. Okay, then, but does not include the tax paid under the composition levy. So any taxes paid under the composition levy is not available. Apart from that, all of that input tax credit is available. Okay. So, okay. Any can we claim ITC if IT is available on GST portal but not file, not get the invoice? No, we cannot get it. Excess ITC is refundable or no? Excess ITC sitting in your electronic credit ledger. Say I've had lot of input purchases and capital goods and lot of things I have, and I don't have sale. So it's been lying just idle for that, like that for 2 months, 2 years also. Will I get a refund of that? Generally, refund is not available to everybody, but a refund is available to a zero rated supplier. So when he's exporting goods or services, he can claim the refund, or when I'm supplying it to a SEZ developer, I can claim a refund. So only these two categories of people get refund of the credit in his electronic credit ledger. Okay, so any excess sitting in electronic credit ledger, even if there's no sale, you cannot claim a refund. The refund can be claimed only by a person who is making a zero rated supply. Okay, there is no GST on export. Yes, there's no GST on export, so they will not charge GST on export. Input tax credit, whatever they have, they can claim the refund. Import of services, explain again. Import of services means services when I'm procuring from outside the country to India. What is the taxes I have to pay on that? I have to pay IGST only, because they have said that on import it is treated as interstate supply. So when it's an interstate supply, I have to pay GST under RCM. And imports interstate supply, I will pay under which provisions? I will pay under the respective 5.3 and 5.4, 9.3 and 9.4 I will pay. So under 5.3 and 4 under IGST Act, I will pay that reverse charge. Okay. What are the other important definitions? Taxable supply. Taxable supply means a supply of goods or services which is leviable to tax. Now, what are the rates of levy? It could be 5% or it could be 18% or 28%. Any percentage is fine. Any supply of goods or services which is leviable to tax is a taxable supply. Then zero rated supply. Zero rated supply means any of the following supplies of goods or services: export of goods or services or both, or supply of goods or services and SEZ. So exports of goods or services both are there under zero rated supply. Then supply of service goods or services are both through a SEZ developer or a SEZ unit is also zero rated supply. Okay, so all of this is the important definitions. Any your questions? Supply. So what do you mean by in the course of further of business? I've explained that before starting the business or after closing the business, you want to wrap down the business. Then all of those activities are also in the course or furtherance of business. So supply attracts nil rate means, can you please give an example? It attracts nil rate means in the rate schedule, we have some products wherein they mentioned this is the product or this is the service. Even for service, we have this thing. The rate where it is mentioned, there it will be mentioned nil. If it is mentioned as nil, it means it is a exempt supply. Excess ITC is refundable? No. There is no GST on export. Yes. Import of services, please explain. I've just explained you. How an SEZ claim input tax when their supply is zero rated? So SEZ will not generally claim the refund because the person who is supplying to them, he will not charge GST. Okay, but if he is still charging GST, then SEZ has an option to claim refund if they have any purchases on which the supplier has charged GST. What is the difference between electronic credit ledger? Electronic credit ledger and what? What difference between what and what? Mansa, please ask your question. Mansi Sinha, please ask your question clearly. Tax paid on reverse charge mechanism can be available to pay output tax. Yes, tax paid on reverse charge mechanism is also an input tax credit. That input tax credit also can be used for making payment of an output tax credit. Okay, now we'll get into the section part saying that what all we'll cover, and we'll get into section 16. We'll take a break of 10 minutes, and if any questions are there, please raise it. So I'll answer the question and then move ahead. So we'll catch up at 8:20. Okay. So there are questions on supply attracts nil rate. What do you mean? You mentioned that excess ITC is refundable or no, refundable only to a person who's making export or a person who's making a supply to SEZ unit. There is no GST on export. Yes, there's no GST on export. Import of services means when I import any services, I have to pay GST under RCM. That is import of services. Examples of import of services: any consultancy charges received from a foreign supplier and you are a registered person in India. So that's an example of import of service. Or downloading of video, downloading of audio. And if you're registered, you have to pay GST under RCM. That is example of import of services. How an SEZ can claim input tax as they supply zero rated? SEZ will not claim. If you are supplying it to an SEZ unit, then you can claim it, right? Because you are supplying it to an SEZ on which you will not charge GST. So that is a zero rated supply. So when you are supplying it to an SEZ unit, you don't have to charge GST and you can claim the credit. What is the difference between what? E-credit ledger and electronic cash ledger? Tax paid on electronic reverse charge mechanism can be available. Yes, reverse charge mechanism. What I'm buying any garment manufacturer, I buy fabrics. The fabrics are at say 12% rate, and my output on my fabrics is at 5%. In that case, it is called as an inverted duty structure, where my input tax is at a higher rate and output tax is at a lower rate. So if I'm having that scenario, refund is available. Or if I'm having inputs for which I'm making zero rate supply, I have a lot of inputs. I'm making supply to a SEZ unit, or I'm making supply to I'm making export of goods and services. Only in those two instances, I will get the refund, not otherwise. Even if your business is winding up, what happens to your credit? It all gets lapsed. Either you have to make sale. Then why will the credit be lying? Because you have not sold properly, or you have sold at a lesser price, right? In that cases, the credit will not be available to you. It gets lapsed. Can you explain e-way bill? E-bill we'll discuss when we discuss separately. E-way bill, it's not part of this. How is it possible that GST paid is we can claim back through ITC? How is it possible the GST paid we can claim back through ITC? That is the input tax credit. So whatever purchases I make, okay, that is my electronic credit, which is available in my electronic credit ledger. I can claim it. So all purchases, all expenses, what I make for business purposes and satisfy the conditions of ITC, I can claim the credit. Can we issue revised invoice to supplier? In normal circumstances, we cannot issue any revised invoice. Why? Because why is the importance of revised invoice there? Because revised invoice also is one of the documents on which I can claim the credit. So if I made any mistake in my invoice, can I revise the invoice and give it? No, revised invoice is not possible. If I made any mistake, I can correct it through issuing a credit note and then issuing a fresh invoice. But revised invoice is not possible. Revised invoice is available only in one circumstances, when I have taken registration, and if I'm a new registrant, only then within 1 month I can revise the invoice, not otherwise. So only a registered person who has made any supply, he has applied for registration and he's not got the registration, then he can give a revised invoice, not otherwise. The scope of input tax credit. First is section 16, which says specifies what is the eligibility and conditions of taking credit. Very important. If I satisfy these conditions, only then I can claim the credit. So section 16 specifies what are the eligibility and what are the conditions for taking credit. Section 17 says what are the apportionment of credit and block credit. Apportionment of credit and block credit. Block credit definition is given here, and how do we do the apportionment? That apportionment, what we had spoken up, that we given you a chart on the common input tax credit, how will you apportion? That is being given in section 17. Section 18 says availability of credit in special circumstances. What are those special circumstances? When I move from a reverse charge, if I move from a composition scheme to a regular scheme, or if I move from a regular scheme to a non-regular scheme, to a composition scheme, what happens to the credit? That is being described in section 18, availability of credit in special circumstances. Then taking input tax credit in respect of inputs and capital goods sent for job worker. When I send goods to job worker, what happens? That is given in section 19. Manner of distribution of credit by input service distributor. So there is a special category of person called as input service distribution. You have to take special registration as a input service distributor. So if I take registration as an input service distribution, whatever credits is accumulated to me, I can distribute to my other branches. That is being discussed in the section 20 of input service distributor. Manner of recovery of credit distributed in excess. If credit is distributed in excess, how is it recovered? That is given in section 21. So this is what we will discuss under this chapter. First is section 16. Section 16, the basic conditions is who is eligible for taking tax credit. Section 16, subsection 1 reads as follows. Definition, I'll just read it so that it is clear. Section 16, subsection 1 starts with every registered person. What does it start with? Not taxable person. It says every registered person. So every registered person shall, subject to such conditions and restrictions as may be prescribed and in the manner specified in section 49, be entitled to take credit of input tax on charged on any supply of goods or services or both to him which are used or intended to be used in the course or furtherance of his business, and the set amount shall be credited to the electronic credit ledger. So section 16.1 has three important parts. Says that every registered person, okay, every registered person can claim, which means I should be registered to claim the credit. If I am not registered, I have under the liability to pay the output tax, but I will not get the benefit of input tax. So you have to register to claim the credit. Every registered person shall, subject to such conditions, be entitled to take credit of input tax on goods or services or both goods or services which is to be used in the course of furtherance of business. Which means if I'm buying it today, should I sell it today? No, not necessary. It is intended to be used for the business, which are used or intended to be used in the course of furtherance of business. Which means I can buy it to be used today, or I could be buying it to be used in the future also. Similarly, capital goods also. Capital goods, why I'm buying it? To be used in the future. That's why on capital goods also I get the credit. So I get credit on any goods and services used and intended to be used in the course of other business, and the said amount shall be credited, such ITC is credited to the electronic credit ledger. So through a mechanism, that amount is credited in the electronic credit ledger. So if these twin conditions are satisfied, then I am firstly eligible to take the ITC. Section 16.1 says this, saying that if I am registered and I am buying any goods or services which I am intending to be used for the furtherance of business, such that is the eligible ITC, such ITC is credited to the electronic credit ledger. That is section 16.1. Then 16.2 says what are the conditions of availing the ITC. First you should be registered. That is the primary condition. After that, they say that what are all the conditions to claim the ITC. So just give me 1 minute just while you read this. Yes, sir. Yeah, you can stop. No, just some disturbance was there. Now it's fine. Okay. So we were discussing on the conditions to claim the credit. 16.1 we understood. Okay. What are the conditions to claim the ITC is what we are discussing. What are the various conditions? First is I should be in possession of the tax paying document, which means मेरे पास invoice, debit note or whatever is the document basis which I can claim the credit, that I should be in possession of. Okay, credit can be availed if I have that document in hand. I should be in possession of that tax paying document. Then I should have second condition, I should physically receive the goods. If I've just got the invoice and goods have not been arrived, then I cannot claim the credit. So it's very much possible that invoice has been sent by the supplier and the goods are in transit. So can I claim the credit? No, I cannot claim the credit. I can claim the credit only when I receive the goods or in a case wherein I have received the services. So either goods should be delivered to me or services should be received by me. That's the second condition. Third condition is tax levied on supply is actually paid to the government. So tax which is being levied should be actually deposited to the government by the supplier. And fourth condition is I should claim the ITC by filing the return. I should claim ITC by filing the return. How do I do this filing? Through filing a return called GSTR-3B. Okay. So I should be in possession of the tax invoice. Firstly, either tax invoice or debit note issued by the supplier. I can claim credit through the document. That document is invoice or a debit note. These are the valid documents. Or such other duty paying documents that we will get to. What are other duty paying documents? But primarily tax invoice and debit note should be there. I should have received the goods or services. Then the tax charge should be paid to the government, and I should have furnished the return under section 39, which is the return in terms of GSTR-3B. So if I've satisfied all these four conditions, then I can claim the input tax credit. Firstly, I should be registered. If I've registered, then I have to fulfill all these four conditions, then the credit is available. Okay. Now we'll get into each and everything and how do we understand this, because each of this is relevant. You could have a separate question in each of these conditions itself. Tax paying document. What are all the tax paying documents? First condition is I should be in possession of an invoice or debit note or any other tax paying document. Okay. Now what is the tax paying document? Invoice issued by the supplier of goods or services. So invoice which is issued. Invoice issued by the recipient receiving goods or services from unregistered supplying along with proof of payment of tax. Invoice issued by the recipient for receiving goods from an unregistered supplier. So basically, in case of 9(4) cases, I should issue a self-invoice. Okay, that cases, the invoice which is self-generated. Okay, supplier will issue an invoice, but I also have to raise the invoice and pay taxes on reverse charge. So just paying of taxes is the important condition, but procedural condition is that invoice issued by the recipient for goods or services purchased from an unregistered person. So in case of 9(3) and 9(4), this is relevant wherein I should raise a self-invoice basis which I will get the credit along with proof of payment of tax. So I should raise a self-invoice and I should pay the tax. Both conditions have to be satisfied to call it as a tax paying document. Debit note issued by the supplier. So in case of debit note, we are very clear what is debit note. In case of price increase, in case of any addition in value or any instance where the value has to be increased, then debit note is issued by the supplier, right? So that is also a valid document. Bill of entry. In bill of entry, what credit I will claim when I purchase something? Customs duty is charged and IGST is charged, right? So that bill of entry itself is becoming a document for me to claim credit of IGST. How can I import something? I will give my GST number also to the customs authorities. They will mention my GST number, and that bill of entry will have the IGST which has been levied along with customs duty which I pay. So this bill of entry also is one of the valid tax paying document. Revised invoice. What is this revised invoice? Can anybody raise a revised invoice? No. Revised invoice can be raised. Somebody was asking that question just some time back. What is a revised invoice? Can anybody issue a revised invoice? Everybody cannot issue a revised invoice. It can be issued only by a new registrant, a person who is registered for GST for the first time, and he's made any supplies between the date of filing an application of GST and getting the actual GST registration. So if there is a time lag, right? Because once I apply, the officer will approve, will take some time. So by the time he takes the time, I've already applied for registration. I've made some supplies. So I've made some supplies and charged GST, but I've said I will not mention the other person's GST number. I will not mention my GST number also because I've not got it. So that's the reason in such situations within 30 days from the date of registration, whatever invoices have been issued before registration can be revised, right? Not any indefinite invoices, those invoices which have been issued after applying for registration and before getting registration. After I got the registration, within 30 days, I can revise those invoices. So only in such cases, revised invoice is permissible. So revised invoice also is one of the document to claim the credit. Document issued by an input service distributor. Okay, who is an input service distributor? I have various branches in the state. One location I have registered as an input service distributor, saying that all invoices pertaining to all other branches which are commonly purchased will go to this input service distributor unit. It is called as ISD, input service distributor. This ISD unit will get all the bills, and that unit will apportion the credit to various branches based on the various rules which is to be followed. So it says that, okay, if you get an invoice which is for one particular branch, then that credit has to go to that branch. If it is common credit, then that has to be distributed to all other branches, either on turnover ratio or any other ratio. So this ISD will distribute the credit through an ISD invoice. So he will take the credit and distribute the credit. So he's a distributor. So input service distributor cannot distribute the credit to any outsiders. He will distribute the credit to the entities which are registered within the same PAN. Okay, for ease of convenience or for betterment, wherein they're making a procurement at one single office, they will procure it and then they will distribute it. So ISD can distribute the credit through a ISD invoice. So the document issued by a ISD, which is the ISD invoice, is also a valid document to claim the credit, right? So these are the documents through which I can claim the credit, but I cannot claim ITC of taxes which is paid towards demand involving fraud. Okay, if there is an investigation happened and the authorities find that there is some tax payable, so they will demand extra tax. But if that demand is for any reason of fraud and I've paid taxes on that, I cannot claim the credit. Okay, so any ITC on taxes paid through demands involving fraud, their credit will not be available. Understood on this tax paying document? So these are the various tax paying documents which are available under GST. What are the minimum requirements of a invoice? So basically, an invoice should be having, what is the format of an invoice? It should be having very, just expand this. It should be having the GSTN of the supplier. Tax invoice should be mentioned. Original for recipient, duplicate for transporter, and triplicate for recipient, triplicate for the supplier. So 3 copies generally are issued. His name is mentioned. Then the customer's details are mentioned. What is the customer's name, address, and customer's GSTN number? Then the place of supply, invoice number, PO number, challan number. These are all optional. If required, you can mention, else not required. Invoice number, invoice date, challan number, challan date, and things like that. But majorly what is required is only invoice number and invoice date. Then what is the product which is being supplied? Then the HSN code. HSN code, earlier it was 4-digit. That's why 4 digits were mentioned. Now it is required to be mentioned at the 6-digit numbers. So name of the product, HSN code, quantity, rate, taxable value, and the GST rate. Okay, what is the GST rate, what they're charging, and the total tax. Okay, so these are the relevant contents which has to be mentioned. Other information are kind of commercial things, but as a GST law, these are the things which is required. So what are the minimum requirements in the document? GSTN of the supplier and the recipient, description of goods or services, total value of supply. This value of supply is important because that is the value which you have arrived at based on valuation rules. So that on that you will pay GST. Amount of tax charged. This is the total amount of tax charged. Place of supply in case of an interstate supply. This is mandatory. Why? Because the GST has to flow into that state. So place of supply has to be required. So these are the requirements of mentioning the minimum requirements in any document. Sir, when there is a mismatch of ITC in electronic ledger, then how ITC can be claimed by the supplier? That we'll get into that. Next slide, just wait, Rika Kumari. How do we claim the credit? We'll just explain. Do we need to remember sections of CGST and IGST, or we can only learn CGST? If you learn provisions of CGST, I think that should be sufficient. Can we write the language of analysis in exam as it is easy in comparison to the section given? Yeah, section what is given is only for your reference. You can make an analysis of your own, no problem. But you have to be in sync with the section. Can't be that you depart from the section very much. It should be in sync with the section. Means in the last example, 350 input tax will be paid by the customer only after claiming ITC. So in that example, 450 was the output, 300 was the input. So 300 he will claim ITC and pay 150 rupees to the government. So the payment of tax to the government in section 16.2C is without ITC or with ITC. Payment to the government in section 16.2C. What is your question here? 16.2C is a condition of what are the conditions for claiming ITC. So if I've satisfied those conditions, I can claim the ITC. The tax charge, okay. So one of the condition is this condition. Okay, I understood what is your question now. You're asking that one of the conditions you said that tax has to be paid to the government. Yeah. So you're saying that one of the conditions is the tax levied on supply is actually paid to the government. So this tax, is it just output tax what is charged, or can he claim the credit? He can also claim the credit. Paying of taxes means paying full amount through cash or paying the amount through credit also. So if some supplier is supplying goods to me, he has to pay the taxes. That is the third condition. Now this condition of payment of taxes, it can be either payment full amount of tax to the government or paying through his ITC, because he also will have ITC. So any ITC what he has, if he offsets that and then pay it, that is also a valid payment of tax. That is also permitted tax payment. So what if the whole amount of tax is not paid, for say only 80% tax has been paid, then can we claim ITC, or first he needs to pay the remaining 20% of the tax and then claim ITC? Very good question, Sunil. Now when he makes a supply, he will report that in his GST portal and pay the taxes. Practically, he cannot pay part of the taxes. If he pays part of the taxes, he cannot file the returns. So in effect, he has to pay 100% of the tax itself. So he will end up paying either 100% or 0%. Either he will not pay or pay. If he pays it, he does not have an option to make part payment. The system of the GST portal is made in such a way that he cannot make part payment of taxes. He has to make full payment of taxes. So if he makes the full payment of taxes, then only I can claim the credit. Only then it will reflect in my GST portal. So if he makes 80% tax, can I claim 80%? That question will not arise because the system does not allow him to make partial payment. He can make full payment only. Okay, so he can make full payment of taxes and I will get the full credit. Challan, bill of supply, voucher are valid tax paying documents. Yes, challan, bill of supply, voucher is not a valid pay. Challan will be a valid tax paying document if I make GST under reverse charge basis. What is PO date? PO date means purchase order date. That is when the customer gives me a PO saying that I'll give you a purchase order, you supply goods to me. That is a purchase order date. Place of supply is the place of recipient. Yes, place of supply is the place of recipient. We have understood place of supply is not there in your syllabus, but place of supply is a separate provision wherein generally for goods, it is a place where the supplier is located, but for services, it varies. Okay. If goods are received in installments, what happens? That we'll just discuss. So we have just understood the first part of what are the various tax paying documents. Okay. Minimum requirements, we have understood this. Now there is something called as a rule 36.4. Okay. Let's understand this rule 36.4 and GSTR 2A in detail because you will get questions on this. Because this is the topic which is there as a most important thing on what is the credit you can claim and things like that. That's why this topic becomes very important. ITC on invoices. So in the section we said those conditions. Then there was a rule. The rule said that I will give you credit subject to some other conditions to be satisfied. What are those conditions is ITC on invoices or debit notes which have been furnished by the suppliers in their GSTR1 or using IFF. What is GSTR1 and what is IFF? Firstly, you have to file monthly returns or quarterly returns. Option is there. So what are the two returns what we file? We file two returns called as GSTR1 and GSTR3B. So in GSTR1, I report only my outward supplies. Whatever sales I made, that I will report in GSTR1. Okay. Whatever outward sales I make, that I will mention in my GSTR1. So GSTR1 is for those taxpayers who are paying taxes on a monthly basis. So they will file GSTR1 and they will also file GSTR3B. GSTR1 is the outward supply statement and GSTR3B is the monthly return. Okay, so based on GSTR1, what will I enter in my GSTR1? I will enter the customer's name, customer's invoice number, the date of invoice, customer's GSTN number, and the tax and the value of supply. I will mention his GSTN number also. So once I mention his GSTN number, that will go to his electronic credit ledger, not directly. That will go to his GSTR 2A. Okay, whatever outward supplies I report in my GSTR 1, that appears in the GSTR 2A of the customer. How does it appear? I will mention his GSTN number. Basis that GSTN number, it will appear in his one statement called as GSTR 2A. So GSTR 2A auto-populates all the purchases what he's made, or whoever are the parties from whom he has made purchases, that appears in his GSTR 2A. Okay, so that is possible in case of a monthly return filer. Then the government came up with the scheme of quarterly return filers, saying that okay, if your turnover is less than 1.5 crores, you're a normal dealer, then you can upload your GSTR 3B on a quarterly basis. Okay, so then I will not file GSTR 1 on a monthly basis. I will file on a quarterly basis. Then there was a issue saying that some customers complained that I'm buying from somebody, but he's a quarterly filer, so my credit is not getting appearing. I cannot claim the credit. Even though I have purchased from my vendor in the month of April, it is not appearing in my GSTR 2A in the month of April because the vendor who supplied to me, he's saying he will upload the return on a quarterly basis in GSTR 1. So by the time he uploads in the GSTR 1, my credit will get delayed, so I cannot afford it. So the government said, okay, don't worry. The person who is filing on a quarterly basis, he will file the returns on a quarterly basis. But the invoice or the input, what you have to claim, we will give him one facility called as IFF facility, invoice filing facility, wherein he will upload all the details of GST sale what is made in the month through this IFF facility. Okay, through IFF facility, invoice furnishing facility, which is here, through this IFF facility, he will upload your details on a monthly basis. He will not file GSTR1, but instead of GSTR1, he will file this IFF. Once he files this IFF, that credit also will appear in your in your GSTR2A. So first, supplier files GSTR1, okay, based on 1 or IFF, whatever has been filed, that will appear in GSTR2A of the recipient. Okay, so GSTR1 and IFF, basis which the recipient will get the credit in his GSTR2A. Okay, 100% ITC. Now I've seen that, okay, what is appearing in my GSTR2A, that is there. So once it is appearing that I have a purchase document and all the conditions of the taking of input tax credit is satisfied, then I will see my GSTR2A. If it is an invoice of 10,000 rupees from party A and it is appearing in my GSTR2A, that party A's invoice is appearing, everything is matching, I can claim that credit. So ITC on invoices or debit notes which have been furnished by the supplier in their GSTR1s, 100% ITC can be claimed on such invoices or debit notes if all other conditions of availing ITC are satisfied, right? And take another party from whom I have purchased, party B from whom I purchased for 10,000 rupees. Now this, when I see I've satisfied all the other conditions, but it is not appearing in my GSTR2A. What do I do in that such case? ITC on invoice or debit notes which have not been furnished by their suppliers in their GSTR1s are using IFF. 5% of the eligible ITC available on invoice or debit notes furnished by the supplier in their GSTR1s are using the invoicing furnishing facility can be claimed on such invoices or debit notes. So I have purchased from party B. His invoice is not appearing in my GSTR2A, but I have the purchase invoices. I am telling to my vendor that it is not appearing, but he's still checking, or for whatever reasons he's not filed it. But will I get the credit of that or no? I will still get the credit subject to a cap of 5% of the eligible ITC. Subject to a condition of 5% of my eligible ITC. Okay, I will get credit up to the extent of 5% only. Which means I have made purchases from various 10 vendors. Now they have uploaded all of that and it is appearing in my ITC in my GSTR2A. Now the value of this purchases or the ITC what is there is say 10,000 rupees. So 10,000 I will get claim fully. Now this 11th vendor from whom I purchased, that is for a value of 500 rupees. Now he is not uploaded. So this condition rule 2A says that 100% you claim for those 10,000 and you can claim up to 5% of the eligible ITC. So 10,000 was my eligible ITC. 5% is how much? 500. So up to 500 rupees also you can claim. So you can claim 10,000, okay, plus 500. 500 you can claim if somebody has given you a bill but not uploaded. Like that other 11th vendor, he has given me a bill but he's not uploaded. That ITC also I can claim it. So I can claim credit to the extent of 10,000 plus 500. Okay. Take another example. 10,000 is there appearing fine. I have received invoices to the extent of 2,000 rupees and credit is not appearing in my GSTR2A. So how much can I claim? 10,000 I can claim and 5% cap on that is 500. So I can claim out of that 2,000 rupees only 500 I can claim. So I can claim a credit of again 10,500 only, not the 2,000, because 2,000 there is no limit. The limit is only 5%. The earlier limit was 20%, then 10%, but for your exams, the relevant percentage is 5%. So you can claim what is appearing in the GSTR2A plus 5%. Now take a third scenario. 10,000 is appearing. I purchased from one person who has supplied me GST with the ITC of 300 rupees. So then in that case, how much can I claim? 10,000 plus 5% is 500. But can I claim full 500? I am eligible to claim 500, but the invoice in which I have not, it's not appearing in GSTR 2A is only to the extent of 300. So I can claim only to the extent of 300. I cannot simply randomly claim more amount. I can claim to the extent the other person has given me an invoice. Now he has given me an invoice for ITC of 300. So I can claim 10,000 plus 300, not 10,500. Okay, I can claim only to the extent of 10,300. Clear? So GSTR 2A, how does it work? Mr. A sells goods to Mr. B. He files his GSTR 1 details of outward supply. So either it will be GSTR 1 or IFF. Info from GSTR 1 gets reflected in GSTR 2A of Mr. B. Mr. B goes from GSTR 2A to GSTR 2 after bias. So basically, GSTR 2A is not there today because that was the initial scheme. So he will only take what is the credit in GSTR 2A. From whatever is there in GSTR 2A, he will pay amount of tax paid on purchases, gets credited to his electronic credit ledger. Okay, so once he accepts this, he files his GSTR 3B, that will get credited in his electronic credit ledger. Okay, how does this GSTR 2A? Let's take an example. ITCB is to be broken down. Say 100 rupees is the ITC for the month. First is total ITC what I have to break it into what is eligible and ineligible. What is ineligible is the block credits. So on the block credit, I will not get the credit at all, right? Say for out of 100, I have claimed 100 out, 10 is a block credit, which is not eligible. I will not get it. So I say I've purchased car. On that credit is 10 rupees, credit goes off. Then I have to go to section 16.1, compiled, which means this portion can be availed. Complied, which means this is complied with this GSTR rule 36.4 and GSTR 2A. It is complied with these provisions and it is appearing. So to the extent of 70, I can claim the credit. So this is my eligible ITC. Once I've claimed the eligible ITC, to the extent of not complied, which is not available in GSTR 2A is to the extent of 30. So what is not available out of this, I can claim only what is permitted, which is 5%. Out of 75% is permitted, I can claim 70 plus 3.5. I can claim only 73.5. Okay, so this is what is the credit, what I can claim. What if the whole amount of tax is not paid? Say, okay. So Sunil Dubey, your question is, what if the whole amount of tax is not paid, or say only 80%? So partial they cannot be paid, it can be fully paid only. Place of supply is the place of recipient. Yes, if goods are received in installments, I can claim the credit only on receipt of last installment. Okay. If it doesn't pay tax, what will be the further consequences? Like someone has to pay taxes, right? Yes, it has to be paid. So if it doesn't pay, he will pay in the subsequent months or later months, whenever it's there. Otherwise, the officer, the authorities will issue a notice to him saying that your taxes has to be paid, you have not paid, so they will pay the taxes then. Sir, if a supplier has paid tax to the government after deducting output tax or input tax, then we can claim ITC. Yes, we can still claim ITC because output tax minus input tax only they will do and then file it and not other ways. So how I will get the credit, similarly, everybody will get the credit. So my supplier also will get the credit. So once he claims the credit, then he will pay the GST. So after claiming credit also, if he pays, that's fine. That is also permitted. That is also valid condition. Sir, is it mandatory to file IFF? No, it is not mandatory to file IFF. IFF is an optional thing. GSTR 1 for monthly return filers, they have to file. And for quarterly return filers, they have to file GSTR 1 on a quarterly basis. IFF is only a facility given to you saying that, okay, if your customer is shouting at you, saying that I'm not get the credit, you are a person who will file on a quarterly basis, I cannot wait for it. In such circumstances, you will file IFF so that the other person can claim the credit. 5% of ITC on which not uploaded. Yes, 5% of the ITC which is not uploaded. But 5% is to be calculated of the eligible credit. Of the eligible credit, it has to be calculated. 5% of the taxable value of that particular supplier or the whole taxable value of purchases. No, 5% of the whole purchases. Total input tax credit which is uploaded in the GST or 2A of that 5%. Okay. So if my ITC is not appearing is 200, only, then my eligible ITC is 10,000, then 5% is 500. So should I claim whole 200? Yes, you can claim 200. So you can claim. So there's a question, if my ITC not appearing is 200 only and my eligible ITC is 10,000, 5% of 10,000 is 500. So should I claim 500? No, I can claim only 200 because 200 is what is my purchase. So I can claim only to the extent of 10,200. If GSTR 1 and GSTR 2A amount matched, then 100%. Yes, if it is matched, then 100%. If not matched, then 5%. Correct. That's right. Which second part, Siddhant? Which second part you want me to explain? Sir, for every registered person, the available criteria is 10,000 only, or it's different for different registered limit of 10 lakhs. No, 10,000 is only an example which I gave you. Whatever it is, whatever is appearing in your GSTR 2A, that is your amount. It is 10,000 is just an illustration I gave you to understand. Whatever is appearing in your GSTR 2A, that one, and then 5% of that. So we'll just take a case study and understand. Okay, as per books, I have 9 lakh purchases. That means I have purchases to the extent of 9 lakh rupees, which have made purchases from various people. On the credit in my books of accounts is 40,000. Because some ways the rates will be less and things like that. So the credit is 40,000 rupees. Details of suppliers' invoices reflecting in GSTR 2A for which recipient is eligible to take ITC. So who are all the suppliers who have claimed, who have uploaded my purchase invoices is mentioned here. Then how much is the credit available is what we have to calculate. So in case 1, suppliers have furnished in form GSTR 1 80 invoices. I may have more than 80 invoices or less than 80 invoices, but 80 invoices will generally be more than 80 invoices. So 80 invoices involving ITC of rupees 6 lakhs as on the due date of furnishing of the details of outward supplies by the supplier. Okay, so 9 lakh is the credit as per my books. Just 1 minute. Yeah, 9 lakh is the credit, not 40,000. Okay, so the credit actually I've corrected the value so that the example fits in properly. 8,40,000 is the credit which is appearing in my books. So I have claimed credit to the extent of 8,40,000 rupees. Now in case 1, what happens? 80 invoices have been uploaded by my customers where the ITC of only 6 lakhs is appearing, involving ITC of rupees 6 lakh as on the due date of furnishing of the details of outward supplies. So in my GSTR 2A, how much value is appearing? 6 lakh rupees. Right? Can I claim 6 lakh rupees? Yes, I can claim because up to 6 lakh rupees I have to claim it. The credit in my book is more than this, which is 8.4. So the difference is how much? First is 6 lakh. Is it available? Yes, 6 lakh is available. So 8.4 lakhs minus 6 lakhs makes it 2.4 lakhs. Can I claim 2.4 lakhs? No. How much can I claim? I can claim 5% of my eligible ITC, 5% of my eligible credit where invoices are uploaded. So on 6 lakhs, 5% is 30,000, right? So I can claim 6 lakh rupees, which is amount of eligible ITC available as per details uploaded by the supplier, and 30,000 up to 5% I can claim. So I can claim credit of 6 lakh 30,000. this is only a provisional thing, that 5% what is there. This is only a provisional thing saying that 5% you will get it because the supplier is not uploaded. You will get it as a provisional basis, but you have to follow up with the supplier and get the actual credit. Okay, so 6 lakhs plus 30,000. This is the credit which I will get it. I will get credit of 6 lakh 30,000. 5%, which is 30,000. Case study 2 is where the supplier has furnished in form GSTR1 80 invoices involving ITC of 7 lakh rupees. So there I will get credit of 7 lakhs plus 5%, which is 7 lakh 35,000 rupees. Fine. This is also clear, right? So 7 lakh is the amount of eligible ITC which is appearing, and up to 5% I can claim, which is 35,000. So I can claim credit of 7 lakh 35,000 rupees. Case scenario 3, wherein 75 invoices involving ITC of 8 lakh 50,000 has been uploaded. So can I claim, and 5% of this 42,500. Can I claim 8 lakh 50 plus 42,000? No, because my credit is only 8 lakh 40,000. So I can claim. So there is a possibility that I will get more than what I have. Sometimes some invoices will appear more than what I have. Okay. So I can claim only to the extent what is there in my books and not more than that. So if some wrong invoices are there or some corrections has been made, or wherein instead of last month's they have uploaded now, can I claim it? No, I can claim only what is there in my books. In my books, I have credit only to the extent of 8 lakh 50,000 rupees. In my books, I have only credit of 8 lakh 40,000 rupees, and invoices up to 8 lakh 50,000 has come. So I cannot go like blindly saying that 8 lakh 50 plus 5%. No, that is not permitted. I can claim only ITC to the extent what is there in my books. So this is a special benefit given to you, but this benefit you just cannot blindly apply it. You can only apply it to the extent of what is a credit in your books. Credit in your books itself is 8 lakh 40,000. So you can claim only to the credit of 8 lakh 40,000. Okay, can't claim more than that. So when invoice is not uploaded, मैं सिर्फ 5% तक का क्रेडिट क्लेम कर सकता हूँ, उससे ज्यादा नहीं कर सकता हूँ. So I can calculate only up to 5%. So how to calculate 5%? Somebody have asked for example. See, I've given you the example. For every registered person, the available criteria is 10,000 only. No, every registered person, the criteria is what is appearing in his GSTR 2A. On that 5%. If a person purchases goods from one supplier and that supplier has not filed the return, therefore ITC is not available in GSTR 2A, then what will be the ITC? The ITC will be what is appearing in my GSTR 2A plus capped at 5% extra I can claim. Okay. Balance credit can be claimed in next month. Balance credit can be claimed in the next month if he uploads the invoice. So it will be on a recurring basis, saying that this month, like take this example. In this month, 80 invoices with the extent of 6 lakhs is appearing. So I'm claiming 6 lakhs. Balance, how much is it there? 2 lakh 40,000. So 2 lakh 40,000, if he's uploading next month, then that much I will claim, and I will reduce 30,000 because this 30,000 I claimed it as a buffer in this month. So those vendors also have to upload it. It's not that if they don't upload in 1 month, we should keep quiet. We have to follow up and tell them to upload it in the next month. So next month they will upload, then it will match. Then that month I can claim it. Right? Next month I can claim. I will reduce 30,000 because 30,000 buffer I have taken. So this will keep going on every month on month, saying that vendors who have not uploaded in this month are expected to upload in the next month. If they uploaded it in next month, then you will get the credit next month. So unless and until it appears in GSTR 2A, I cannot claim the credit. I can claim credit only to the extent of 5% extra. Government is saying, okay, the vendors have to upload, but not all vendors have uploaded. Fine. So I'll give you a benefit of 5%. So whatever is the value uploaded by your vendors, on that extra 5% you claim it. But this, to the extent of shortage of 2.4 lakhs, those vendors will upload next month. I will see what is there in my GSTR 2A of the next month, match it with the shortfall what I've claimed this month, and then claim that differential next month also. So if everybody is uploaded, then I can claim next month 2,40,000 minus 30,000 because 30,000 I've already claimed as a buffer. So 2,40,000 minus 30,000 up to 2,10,000 I can claim it. And then next month's criteria also will come. Think next month how much purchases I made, how much is it appearing in my GSTR 2A. Okay, so the credit can be claimed to the extent of differential not claimed in the next month. Means up to book credit. Yes, up to the book credit. In case 3, where the total credit is furnished, then why to calculate 5%? Yeah, not to calculate. I'm just doing a calculation to show you that you have to see what is the credit in your books and what is the credits available in your GSTR 2A. Cannot take this benefit every time. You're right. You have to restrict your credit only to the extent what is there in your books of accounts. So please explain case 3. I didn't get it. Case 3 is a case wherein I have a credit of 8.4 lakhs in my books. Now the vendors have uploaded credit to the extent of 8,50,000. They have uploaded more. Is it possible? Yes, it's possible, because wrongly it would have got credited and whatever things it would have got uploaded. So generally what I've done, the thumb rule I've said is 5% credits on 8.5 lakh, 5% is 42,500. So should I blindly go with 8,42,000 plus 8,50,000 plus 42,500, which is 8,92,500 and claim it? Is that the credit which I have in my books? No, I don't have. I have credits only to the extent of 8,40,000. So I can claim only to the extent of 8,40,000. That 5% buffer will not apply because the credit in my GSTR 2 itself is more. So I can claim credit only to the extent of what is there in the books and not more than that. Okay, so I can claim credit to the extent of 8,40,000 is what I'm saying. What will be in case of RCM? Then how can we claim? RCM is a separate case. RCM, you don't have to see GSTR 2A because whatever you pay taxes, it will not appear in your GSTR 2A. GSTR 2A, what will appear is what is uploaded by the vendors. What he uploads will appear in your ITC, in your GSTR 2A. What you upload yourself, that you can claim completely. No restrictions there because you know how much taxes you have paid. There is no dependency. This GSTR 2A mechanism came in only to ensure that there is no fraud involved. Saying that, okay, some people will get the invoice, but they will not pay taxes or they will not upload the details. So to ensure such cases, this GSTR 2A is there so that the matching happens on the system. For the matching to happen on the system, this is what is being used. Okay. So in case of my own invoices or self-generated invoices, there I don't have to depend on anybody else. So that RCM, GST paid on RCM, I can claim to any percentage, whatever I've actually paid. Okay. Total available ITC amount, will there be a question? Yes, on that there could be a question saying that what will be the total ITC. For example, January 2000 till bill 22 bill is not visible in GSTR 2A, right? Then recurring wise, I can claim, yes, I can claim it in the recurring wise. 100% not visible, I take 5 rupees in January, again not visible in January, then again in February 5 rupees I will claim. So can this keep going? Yes, this will keep going because the total ITC what I have to claim every month, I have to see the ITC for this month, what is appearing in GSTR 2A and what is matching. To the extent how much it is matching on that 5%, I can claim it, no problem. You have to do this exercise every month on month. If we avail extra ITC, then will it be adjusted in next month ITC? Yes, we have to adjust in the next month ITC. We have to do this exercise on a monthly basis. What if rupees 8 lakh includes rupees 10,000 of not uploaded previously? If 8,50,000 includes 10,000 of not uploaded previously, then 8,40,000 is the credit, right? And last month I have not claimed it. I'm claiming it this month. So total eligible ITC is 8,50,000. On that 5% and say last month's credit which you have claimed extra or to the extent of 5% is 5,000. So you will reduce that 5,000 and claim it. Understood? So you will see what is the eligible ITC on that 5%, then extra ITC what you have claimed last month that you will reduce. So that your total credit in the books should not be more. You should not claim more credit than what is there in your books. So you can claim only to the extent of what is there in your books. Last month and this month also you will add up. So basically, practically, you have to keep big data sheets of saying what is the ITC, what are the invoices which were matching and what were the ITC which were not matching, which were running on a buffer system. So if those ITCs are also getting matched in subsequent months credit, that will move to a match credit. To the extent of unmatched, you can claim to the extent of 5%. Okay. So the eligible amount of ITC as per books cannot exceed the credit admissible, that is amount uploaded by the supplier plus 5%. Amount on which ITC is not available, that is block credit, should not be considered for the purpose of calculation. So we have excluded in the flowchart which I gave you, there it's shown that you have to remove the block credit and then you have to do the comparison. So total credit, what is appearing in GSTR, don't see. See the total GSTR 2A, then you remove those credits which are block credits, right? Remove those credits which are block credits, and then on the balance, you see the 5% calculation. Now, full ITC is available on the following year. 5% criteria need not be looked into in case of imports, because on imports, that is the total credit available to you. So on imports, you don't have to see GSTR 2A. On credit on reverse charge basis, then credit from input service distributor. On these three aspects, you don't have to look at the limit of 5%. You can claim it because these are all under your control, because when you import bill of entry is the document. Once you have the satisfying all the other conditions wherein the bill of entry is there, you can claim it. Credit on reverse charge basis, you have paid it under reverse charge basis, you have raised a self invoice, you can claim the credit. Credit from a ISP also is the internal person only, wherein from one unit to another unit, credit has been transferred. So in that case also, you don't have to look into the provisions of Rule 36(4) and GSTR 2A. So in these three cases, you don't have to look at. Restriction is calculated on a consolidated basis, not on an individual basis, saying that each invoice I will claim this restriction. No, on a consolidated basis, it has to be calculated. Okay. What is IFF? IFF is invoice filing facility, wherein a person who's filing quarterly returns, for him, IFF is a facility available so that he can upload the invoices of the customer. How much old ITC supplier can claim? They can claim anything, but of course, subject to the limit of September, this year's credit, I can claim it in this month, this year, any month. From April, if I purchase, I can claim it from April to March. If I claim it in October, from October to March, and I can claim up to September of the subsequent month. Okay, up to September of subsequent month, I can claim it. What if rupees 8.5 lakh include 10,000, not a problem, that I've answered. How much old ITC you can claim? You can claim any ITC up to September of next month. Okay. So we understood this provision of GSTR 2A and Rule 36(4) very clearly. We'll try to work out a question next class, and we'll see how we can understand this. What if I purchased car and supplier uploaded bill, but for me it's blocked? What do we do with the blocked ITC? Blocked ITC, we cannot claim it, and we should not claim the credit of that block credit. And for my calculation of GSTR 2A and 36(4) 5% also, I have to let it go. I have to remove it. So this example, this is the exact example which I gave you. So this is a block credit. Out of total 100 which is appearing in my GSTR 2A, this is my block credit. So I will have to remove it. I cannot claim it, and for my calculation also I should not consider. I should not consider this on the balance what is appearing. So out of the balance, only 70 is appearing. On that, I will do a calculation of 5%. Okay. What is QRMP scheme? QRMP scheme is what I'm saying is a quarterly return monthly payer scheme, wherein they will do a quarterly return and monthly payment. So for monthly payment, they will not file GSTR 1 nor 3B. They will just file it through their GSTR 2A. How will that come in their GSTR 2A? When I file my GSTR 1 or when I file my when I file my IFF scheme. So if I file under IFF also, equivalent to a mini GSTR 1, what is being done on a quarterly basis, I'll do it on a monthly basis. But I will do it only for a person who wants me to give him the credit. He wants saying that, okay, you give me the credit, so I will give him the credit through IFF. What is block credit in ITC? Section 17 will read, that time we'll get to know what is block credit. please explain ISD with example. Just explain ISD is a input service distributor who will distribute the credit of accumulated credit which is purchased and distributed. That is a example of a ISD distributor. Suppose 10,000 appear in GSTR 2A, if the goods by his own or by his agent or any other person on his behalf to claim ITC. So if I have to claim the ITC, the goods should be received is was the second condition. Now the goods should have been actually received by me or by my agent, wherein I've appointed an agent and he is receiving, that is also permitted. But I should have, basically the supplier should have delivered the goods to me and I should have received it. Either I should have received it or my agent or any other person on my behalf. So I tell the supplier that I've raised a purchase invoice on you, you raise an invoice on me, but don't supply to me, supply it to this person. The third person could be the customer of mine or it could be anybody. So any person on my behalf, I say that he will receive the goods. So generally this happens in a bill to ship to transaction, wherein I bill to you, but I will ship to somebody. So once I've shipped it to the other person, it means the goods are received. So only in all the cases, the goods should be received by me, but in the situation of bill to ship to transaction, the goods can be received by the third person. Okay, so even when the third person is received, this condition is satisfied. Okay, if recipient has paid advance to the supplier for supply in future due date, then ITC shall not be allowed on such advance payment. So we know on advance payment also GST is available on advance payment of services. So I made the advance payment. Okay, supplier will charge GST because the time of supply says advance or provision of service, whichever is earliest. For goods, this condition is not there. Okay, so even in case of services, firstly, when I supply services, before that I receive an advance, I will pay GST, but recipient cannot claim the ITC because he's not received the service. The condition is the actual receipt of goods or services, just payment of advance, not sufficient. So he will get the ITC once he receives that services and not otherwise. Okay, once he receives the services, he can claim the credit, not otherwise. So if recipient has paid advance to supplier for supply in future date, then ITC shall not be allowed on such advance payment. So he will get the credit only once he receives the services and the invoice is raised. Okay, suppose in supply of goods also, once I make the advance payment, anyways, he will not charge me GST, and on that advance also, I cannot claim the credit. Okay. Bill to ship to transactions permitted for goods or services, which means bill to one person and ship to is permitted. So bill to ship to, what I was saying is Ganesh Traders, he is in Maharashtra. He's saying, I will bill the goods because the Maruti Traders, which is in Karnataka, because Maruti Traders is placing a bill on Ganesh Traders saying that, okay, I want to buy goods from you. When the goods started moving, I said, don't order to, I've given him the order to deliver the goods, but I said, don't deliver the goods to me, you deliver the goods to my customer in Tamil Nadu. So he will ship the goods to Prime Hardwares and he will bill to me. The one condition, what I said was the goods should be received. So I have not received the goods, but that is still permitted because I have told him to deliver the goods to Prime Hardwares. That is permitted. But what happens in terms of taxation? He will bill me IGST and I will bill to the customer another IGST invoice. So bill to ship to transaction is an exception wherein I am not in receiving the goods, but still I get the credits because the goods are being delivered to the third person whom I have authorized to. Okay. Invoice uploading is done manually one by one or through an app containing all the details. So you have an option, you can upload it one by one, but if you have more invoices, yeah, very good question. So practically, how will it work? So many invoices I have to upload. Can I upload it? Yes, you can upload it. Or you use services of a GS softwares, wherein they will take all the data from your accounting software and convert it and upload it in the portal. So there are softwares which does this, and manually it is done only for small suppliers who are having less transactions. You see, so total credit is 30,000. 20,000 is appearing in my GSTR 2A. So what will be my ITC? 20,000 is my ITC plus 5% of that, which is 20,000 into 5% makes it 2,000 rupees. So 21,000 rupees will be the total ITC what I can claim. Bill to ship to different states are possible. Yes, bill to ship to, yeah, in this example, it is two different states only. No, bill to Karnataka and ship to Tamil Nadu, two different states possible. So totally 3 states are involved in this. That is possible transaction. Yeah, any more questions till now before we move ahead? Other conditions, what is satisfied? So we'll take those in the next class. But till now, if you have understood the basics, we have taken it very slow. I've kept it very theoretical so that you understand the basics very strong. Next class, we have 2 more classes for ITC. In one class, we'll discuss the other provisions. Also, we'll take some numbers. We'll discuss it, some problems so that you will understand it more clearly. But any questions till now? Thank you, Jamil. Thank you, Vikas, for your feedback. Please explain bill to ship to one more time. Okay, bill to ship to, what happens? I am a buyer. I want to buy goods from Ganesh Traders, who's in Maharashtra. So I will tell him I will place an order for you. So I placed an order and he will generally give it the goods to me, right? So when he gives goods to me, I will pay him GST. He will charge me IGST because he's in Maharashtra, I'm in Karnataka. Fine. But I'm telling him, you bill to me, but don't ship the goods to me. Ship the goods or deliver the goods to my customer who is in Tamil Nadu. Because even if you deliver the goods to me, I will also deliver to him. So I'm okay if you know the customer. I know that you will not do anything with the customer. You will not get into direct contact with the customer, but you just deliver the goods to Tamil Nadu customer. So he will deliver the goods to my Tamil Nadu customer. So, but payment who will do? I will only do, because my contract with my customer is different. So I will tell him, you bill to me and ship the goods to Tamil Nadu. So when you bill to me, you will see what is Maharashtra and Karnataka. Maharashtra and Karnataka are 2 different states. You charge IGST and you will ship it to Tamil Nadu. That state you will not look in for whether what GST has to be charged. So you deliver to Tamil Nadu. You charge me IGST. On my state and Tamil Nadu is different. So I will again charge them IGST. Okay. So it depends on where the goods are delivered, goods are built, not where goods are delivered. So why I'm saying this is, one of the conditions I had said you here is recipient should have received the goods by own or as agent or any other person. So I should have received it, or it should have been delivered to another person on my behalf. So in this case also, even though I have not received it, it is received by my customer, that is also considered as a valid case wherein the goods are shipped to the customer. That is also a permitted scenario. Okay, so that is also a permitted scenario. Now, what happens in this case? What will be the GST charge? Will be where I bill to. Suppose I was not in Karnataka and I was in Maharashtra. The seller is also in Maharashtra. I am also in Maharashtra, but the goods are getting delivered to Tamil Nadu. What will be the GST which Maharashtra seller will charge? He will charge me CGST, SGST only, even the goods are moving out, because I am in Maharashtra. So where I am located, where the customer to whom you are billing, the recipient where he is located, that will determine. So if Maruti Traders is in Maharashtra, the Ganesh Traders will charge CGST and SGST, bill to Maruti Traders Maharashtra and ship to Tamil Nadu. Okay, that is another implication there. Yeah, Mansi, your question is answered. The main motto of ITC is to shift the GST burden, is to give the benefit, not shift the burden. The burden is still on you because you have to still pay the taxes after claiming the credit, so that once you pay output tax, the other person gets the credit. It's not a burden. GST input tax, ITC is not a burden. Output tax is a burden. ITC is a benefit which you're giving to the recipient. In bill to ship to, two bills can be issued, first by the supplier to the recipient and second by the recipient to his customer. In this case, who will be liable to claim ITC? Will be liable to whom you are billing. So first person who bills to the customer, that is, he will get the credit. Then the customer bills to the other person, he will get again the credit. So again, the chain follows. Very good. Thank you, Arnav. Thank you, Appinjuli. Thank you, Siddharth. Wow, so many people. Very good. Thank you so much. Just 2 minutes. What is the difference between electronic credit ledger and electronic cash ledger? In electronic credit ledger, we get only the credits of input tax credit. In electronic cash ledger, we get all the tax which we paid to the through bank account, whatever we pay. All that comes and sits in the electronic cash ledger. Another difference is electronic credit ledger can be used only for payment of taxes, but electronic cash ledger is used for payment of taxes, interest, penalty, late fees, and everything. Okay, so electronic credit ledger is what you auto populate. Electronic cash ledger is what you pay to the bank to the government through the bank. Thank you, Vijay Raghavan. Thank you, Ms. Rekha. Thank you, Nitin. If it is in case of bill to ship to, if it is bill to interstate person but shipped to intrastate person, then what type of GST? If it is bill to interstate person, then IGST only will be charged. Place of recipient is relevant in case of bill to ship to model, yes, and recipient is the person whom you bill to and not ship to. Yes, in this case, person giving order can use 15 to recipient to do payment. Recipient can do payment, yes, we can do it, but the ultimate credit will be given to the person to whom it is billed. Excellent. Sir, one question is, Arnav, your question, if supplier exports services on behalf of recipient, but still to an recipient of Indian, which GST is to be supplied? If supplier makes an export of service on behalf of the recipient, okay, so you're saying that I will do supply export to a recipient who is outside India, but delivery is happening in India. So we'll have to see the place of provision rules, which is there in a final. In generally, in terms of exports, the goods have to physically go out. So bill to ship to will not work in terms of an export transaction, because the definition of export is moving goods outside India. Okay. But in case of export services, that will be permitted because you're billing to him, delivering to you, that will be permissible, but not in case of export of goods. The question is on export of services on behalf of the recipient, but still to an Indian, still you will make it as a zero rated supply because your recipient is outside India. Okay, thank you very much. Sir, questions come from these conditions? Yes, it will come from these conditions. It will be a question on ITC on these conditions. Questions can come. Thank you very much. Have a great Sunday, and we'll catch you up on next Tuesday on the same ITC portion. Thank you very much. So, session concluded.